This is the AI News Flash for April 5th, 11 a.m. UTC. First up, Asia's AI boom is facing a serious reality check as energy costs surge from the Iran conflict. According to Fortune, Asia accounted for nearly two-thirds of global AI trade growth in the first half of 2025, making it the world's AI epicenter. But the Strait of Hormuz closure and energy supply disruptions are now dramatically raising infrastructure costs across the region. Microsoft has announced $5.5 billion in cloud and AI investments for Singapore and over $1 billion for Thailand. South Korea's chip exports hit a record $32.8 billion in March, up 150% year over year. However, Taiwan faces a 0.7% decline in industrial production if energy shortages persist for 6 months. Researchers at Nanyang Technological University warn that current AI development relies on brute force approaches assuming abundant peacetime energy. The region's supply chains now have single points of failure, and a shift toward efficiency-first design is urgently needed. Next, Bitcoin miners who pivoted to AI are about to face their first real earnings test. Business Insider reports that publicly listed mining companies have signed over $70 billion in cumulative AI and high-performance computing contracts. Mining revenue is projected to plummet from 85% of total revenue in early 2025 to less than 20% by the end of 2026. The economics are stark. Public miners are currently losing roughly $19,000 on every Bitcoin they produce, with production costs near $80,000 against a spot price around $67,800. By contrast, companies that have successfully pivoted can achieve 80 to 90% operating margins from AI deals. Notably, Bitcoin's hash rate posted its first Q1 decline in 6 years, dropping about 4%. Upcoming earnings reports will provide the first comprehensive validation of whether this massive industry transformation actually delivers. Third, a new open-source library called AutoAgent now lets AI systems engineer and optimize their own agent frameworks overnight. Published today on MarkTech Post, AutoAgent enables AI agents to autonomously refine the underlying infrastructure and parameters that govern how they function, without requiring human engineers to manually adjust configurations. This addresses a major bottleneck in AI development. The traditionally time-intensive process of agent tuning and refinement can now be handled through automated optimization cycles, substantially accelerating the development lifecycle. As agentic AI proliferates across enterprises, this meta approach of AI, improving its own AI, could significantly speed up deployment of capable agents at scale. Finally, AI disruption is now directly impacting retirement portfolios across the United States. Forbes reports that the performance of pensions and 401k accounts, long powered by tech stocks, is undergoing a sharp reversal. With the Magnificent Seven tech giants at record concentration levels within the S&P 500, Alphabet, Amazon, Meta, Microsoft, Nvidia, and Tesla have all posted negative returns over the past month. Analysts point out that markets are waking up to the reality that these companies are spending hundreds of billions on AI infrastructure with no guaranteed immediate returns. This is not a bubble popping, but a correction of unrealistic expectations. The structural concern is that most retirement savings flow through index funds heavily concentrated in tech stocks, meaning AI-era investment volatility is now reaching everyday savers in a way that previous tech disruptions did not. That's all for this AI News Flash.